Morning, everyone, and thank you so much for joining us today. My name is Jennifer Vivian. I'm the Manager of Entrepreneurial Services at the City of Brampton, and I will be your host for this morning's Entrepreneurs Connect series on business viability, the break-even analysis. This session is hosted by the City of Brampton's Entrepreneur Center. For those of you unfamiliar with our office, we are an innovative partnership between the Province of Ontario and the City of Brampton, belonging to a network of 47 small business enterprise centers across Ontario that offers entrepreneurs various tools to start and grow their businesses. We are a one-stop source of resources that provides information, education, access to services and programs that enable Brampton's entrepreneurs and small businesses to grow and thrive. I am in the office today, and I just want to pay special attention to this wonderful phone booth that Meridian has sponsored here at the center. We unfortunately are closed right now to the public, but we look forward to welcoming you into our space when it's safe to do so that you can make use of this great asset. I would like to pay special attention to our series partner, Meridian. Without their generous and ongoing support of our center, event series like this would not be possible. So before we begin, I'd like to go over a few housekeeping items. This webinar is being recorded and a copy will be made available to you at the end of today's session. A link will be emailed as well as a copy of today's presentation. There will be time at the end of the session for Q&A. Everyone on the webinar will remain muted, so we ask that you please use the question box on your participant control panel to type in your questions. I know throughout the presentation, our facilitator this morning will be trying to get you engaged in the conversation, so if you're asked a question, please use the question box to type in your answer. And in the event we were unable to get to your question this morning, you're welcome to email us or the presenter directly. It gives me a great pleasure to introduce our speaker this morning, who's going to speak to us about understanding costs, revenue, and profit, and how to determine the financial viability of your business. Khurram Shahzad is our speaker this morning. Since immigrating to Canada from Dubai in 2001, Khurram has called the City of Brampton home with his wife and 2 kids. With over 18 years of banking experience, he was involved in opening Meridian's first branch in Brampton in 2016 at Brampton and Sandalwood. Continuing with their expansion, he led the opening of their Fletcher's Meadow location in the summer of 2019 and the new Brampton City Centre location in the fall of 2019. Currently, he manages the Chinguacousy South and the Brampton City Centre locations. Him and his wife love to travel, and in his spare time, he loves to play and follow cricket. So I'll let you take it away.
Thank you very much, Jennifer, for that wonderful introduction. Made me think twice if you were actually talking about me or someone else. Maybe I should have had my wife join this call because all she thinks is I sit at home and do nothing. But that's her opinion. Welcome, everybody, to this wonderful session on business viability and the break-even analysis. And it's my pleasure to welcome all of you into the session today, and at an attempt to discuss some of the key elements that we should be considering when we are looking at our business viability and the fact that are we in a successful business, is our business able to break even, and so on. So without further ado, let's go into our presentation, and we're going to be talking about some general concepts. I would like this to be as interactive as possible because that's what we are here for, to make sure that we can help you along the way in this whole series of business viability sessions that we're hosting through Brampton Entrepreneurs Connect. So without further ado, let's move on into our session and some of the things that we'll be actually covering in our session today. So we start off with defining break-even and what is break-even at the end of the day and how it helps us in determining our business's viability. We'll understand some terminology in calculating break-even and factors that impact the break-even point. So we'll talk about some factors that are definitely in our control, and we'll also discuss some factors that we may or may not have control over so that we can decide as to what levers are available to us so that we can pull on them to reduce our break-even point as we are looking into our businesses. And then I'm going to be able to share with you all some tools and calculators. And with these tools and calculators, we'd be able to arrive and maybe look at a couple of live examples, time permitting, to be able to see if we are, able to calculate our break-even point and determine how we can lower it. So with that said, towards the end, we will also be looking at some real life scenarios. And if we don't have one, we will make one up and we will, talk about maybe a startup business, whether it's in the service industry or manufacturing. We'll start small scale and use examples to be able to determine our break-even points and help you calculate that. So with that said, we'll start off with break-even and what is break-even. So for this session today, I'm hoping that all of you have your financial calculators. You've got 10 pages of graphing paper because this is what we will be doing today, graphing multiple break-even points, graphs, looking into all that discussion. So for those of you who have already scared into the session, this was a very late April Fool's joke, thanks to COVID. No, we are not going to be plotting various graphs and analysis using statistics, but we will keep it low key and we will talk about what is break even and how do we define it, and again using some of those factors. So let's move on to break even and what it actually is. So with break even, what I did was I wanted to define it as a normal layman would from the Merriam-Webster dictionary, which defines it as the point at which cost and income are equal and there is no profit or loss. So with that said, what's the business version of a break-even point? A financial result reflecting neither profit or loss or having equal cost and income. A business version would be the Corporate Finance Institute's definition, where they have defined break-even point as a term in accounting where the situation where a company's revenue and expenses were equal within a specific accounting period. It means that there were no net profits or no net losses for the company, and that it broke even. Now, from our list of attendees, I see that there's quite a few here who have joined us today. So my very first question to you all is, one, please type yes or no if you've already started a business for yourself. And I'll wait for your responses that can be typed in the chat. Thank you, Ishfaq. I see a yes here. Gauri, I apologize, I'm using part of your name, Gauri Shankar. Thank you for your response as well. So we have seen a fair bit where individuals have either started their own business or they have are yet to start their own business. So hopefully by the end of this session today, you would be able to add some value if you're already thinking about starting a business to be able to prepare this break-even analysis. So let's understand some of the terminology that we use when we're talking about break-even analysis. We start off with fixed costs, right? This is something that is very important when you're understanding whether you're going to be making a profit at the end of the day. You also have your variable costs. Again, an important factor that is tied directly into the number of units or the level of service that you provide. Then we have our revenue piece, which is actually your sales or the money that you're making from selling your goods. And finally, we have what is known as contribution margin. Some of you might be very well aware of each of these terminologies. However, let's start off a benchmark by defining them because I'll be using them as we proceed through our session. So let's start up with fixed costs. So fixed costs, as the term indicates, are costs that do not change with the varying output of your products or service. So for example, your salaries, your rent for your facilities, machinery that you might have acquired, all of these are costs that have to be paid regardless of whether you are producing your goods or providing the service, or you are selling the goods and providing the service. So these are your fixed costs that come into play at all times. A little bit of control that we have is on our variable costs. These are costs which vary depending on the volume of activity that is done. So for example, your direct material, your direct labor costs, transaction fees that might be incurred, commissions, utility costs. So like everyone understands, the more you produce, the more utilities might be utilized. So these are the variable costs that contribute towards the total cost of a product or service that you're going to be involved in your business. Revenue, the one item that everybody loves is the sales revenue, is the income that is received by a company from its sales of goods or the provision of services. So in accounting terms, sales and revenue can be and often are used interchangeably to mean the same thing. So this is the part which all small business, big business, every business loves, the revenue, and the more, the better. And how we increase our revenue is through reducing our contribution margin. Our contribution margin is the business's sales revenue less its variable costs. So if you notice here, the contribution margin does not include your fixed cost elements. It is only pertaining to your variable costs. So if I were to give you an example, let's suppose someone has opened up at home on a small business scale, a candle manufacturing. So they make candles, they make boutique candles, and they sell online, or they sell to certain suppliers within the market. The cost, the contribution margin would be how much is the variable cost element from that, let's say, $5 sale price of that candle. So if the candle is worth $5, there is an element of variable cost that goes in, and there's an element of the fixed cost that goes in. So the contribution margin is actually tied directly only to the variable cost of it. So the bigger contribution margin, right, that means that you are sort of, eating away into your profits. So let's come back to that, and we'll understand that a little bit more as we look into some of our calculators. Now, what are some of the factors that impact, your contribution margin and even your break-even point? So before we get to that, you know what? It's always fun when you are doing these kinds of sessions in a live environment, because you always have the audience, you're looking at them, you're judging facial expressions, whether they're following along or not. However, when we're doing this virtually, it becomes a little bit difficult, as we don't have that 80% of our communication taken away from us with the expressions and the tone and the emphasis. So feel free as you go along to type in "great presentation," "you are amazing," "wonderful presenter," so that I can know that you are still engaged and you are still online with us. So factors that impact break even. We can divide them into controllable factors, and we can always also look at some of the ones that unfortunately are beyond our control. So here's another, I would call it a polling question, but here's another question out to you. What would you define as some of the controllable factors that can impact, that are under your control, that can impact break even? Please type in your responses. I also do see here that Amisha has a question, so does Ashfaq. And Crystal, I see a mark here as well with a question. And I have Shirin with a question as well. And I have Saint Ike with a question. So we will definitely get to your questions towards the end of the presentation. But from a feedback perspective, if you'd like to throw in your recommendation of what is a controllable or an uncontrollable factor, let's see where we stand with that. All right, great. Some cost of goods. So I see here stocks and advertisement costs, okay, are under your control. Excellent, thank you. Let's look at some of the other responses. Ashfaq says marketing expenses is one of the controllable factors. Excellent. Ashfaq, thank you for that response. Cost of goods, utilities, labor. Gwenda, thank you for that response. So I'm so glad that we are all on the same page. Otherwise, this would have fallen flat. I would have fallen flat on my face with this presentation. So thank you for your input. Controllable factors, absolutely. Production costs, raw material costs. These are some which sales and marketing, advertising costs are some which are under our control. You might have a question as to how is it that raw material costs are under our control? Well, you know what? You have the ability to source raw materials from different channels, and thus either through bulk pricing or through competitive pricing may be able to control that cost, that specific cost. Similarly, production costs can also be controlled through packaging, through volumes and other aspects as well. In some of the uncontrollable factors that you have little or no control whatsoever would be rent and facilities costs. Some on the panel might argue that yes, you can always move to a cheaper facility, or you could move to a cheaper location, and that would be and that would be something that would be within your control. However, when we're talking about control, we're talking about full control. You might move into a cheaper facility, with a cheaper rent at one point in time, but again, the rent control is something that is beyond you and rests with the landlord. So there might be that aspect as well that you have little or no control over. You definitely have little or no control over government licensing and regulatory costs. It's very self-explanatory when it comes to government licensing. If you are going to be producing something which has a licensing requirement, unfortunately, you have to apply for it. And the fees are controlled by the government in terms of regulatory costs. Policy and taxation, again, something that as small business owners, we have very little control over when we're talking about the taxation piece or the policy piece. Product or service demand. For example, in a certain situation, your product might not be in as much demand as right now, or at a different time. And finally, there was one aspect there which we definitely should be including, and that would be a pandemic. So that certainly is something that can also impact your uncontrollable factor piece of things. So with that, let's look at if we have any other questions that have come up. And thank you, Ashfaq, for your awesome comment. I appreciate that. Love the presenter's energy. Thank you so much, Shirin. So let's get all of you working a little bit. Now, as Jennifer mentioned earlier in our call, a copy of this presentation will be shared with you, right? So you will have all these resources, and you will definitely be able to reach back out to us if there's any questions, with respect to something that you're working on in terms of building your break-even analysis. So let's look at some of the tools that are available to us. So first and foremost, we have a tool which is actually located on our website. And it's called the Can Your Business Break Even? It's a wonderful article. So I'm just looking at my audience view here to see that you are now able to see our meridiancu.ca website. And if you are going to our website under Good Sense, there's a lot of articles around small business. As you can see here from a business sense piece, there's about 44 articles that range from different topics that either sometimes keep small business owners awake or can help them, better manage their business. So let's look at the very first one, which is called, the break-even analysis or our break-even calculator. And as you read through this article, you can actually go back in, click on the business break-even calculator, which will then take you to the business break-even calculator provided by Meridian. So here's an example of the break-even calculator. I'm going to show you this right now, but then towards the end, we will come in and we will actually do a live example so that you can understand how this actually plays in, how this works into your small business. So here's one example. And again, what I wanted to do was make sure that you're not just left with one resource. There's tons of resources available, including our break-even calculator. You can always use a Microsoft Excel template. So for those of you who have Microsoft Excel on your computers, as soon as you launch it and you're trying to open up a new presentation, you can actually search for a break-even analysis calculator, and you can create your very own break-even analysis template as well. And then finally, you can also Google through various search engines the different kinds of calculators that are available. So let's walk through an example, right, and see how this actually plays into our day-to-day scenario, so that we will be discussing. So let's do an example walkthrough, and we'll start off with the simple break-even calculator, which is available on the Meridian website. And then I would also love to share with you the Microsoft Excel template, and then involve a little bit of discussion on our end to see how we can work with a few examples and get to where we want to be. So let's look at the break-even calculator again on the Meridian website. So going back in, clicking on and waiting for this to come through, although it's still there in the background, I'm just going to wait for this to play through. So just bear with me here while I pause the presentation and come back to you here. There we go. So this was the break-even calculator that was located on our website. So it starts off simple with what is your desired financial return? What are you looking to make at the end of the year? So let's suppose we will take it as a very small startup, work from home kind of a thing. And while I'm open to you throwing in questions on the chat or maybe an amount, let's say we start off with a small number right here at 60,000, right? So this is our desired financial return. And then level of overheads. So if you've assumed that with rent and salaries and all of that stuff, you know what? My overhead is going to be. I'm just going to again play around with a figure here. Let's say 25,000, right? You see, therefore, the gross margin that you require is about $85,000, right? So that you are able to pay off your overheads and then end up with your required return. We'll go back to our example of someone making boutique candles out of home, all right? And if they're looking at selling each one of the candles, at $5 a piece, let's say. And in terms of the labor, they figure that, it's going to actually, from a labor perspective alone, it's going to cost them $1.25 per unit for the labor. And it's going to cost them $2, oops, not 200 and not 20, just $2 for, the materials. The total cost per unit works out to be about $3.25, $3.25. And when we're looking at the gross margin per unit, this is how much is your margin. Now, it also gives you the flexibility as to, well, how much do you want to work, or how many weeks are you looking to work in each year? So let's suppose I am giving myself a good 2 weeks vacation, because for those of you who missed my intro, my wife loves to travel. I didn't say I love to travel. My wife loves to travel. And yes, over the 21 years that we've been married, I have developed a liking for travel as well. So I like to give myself a little bit of time and, say I'm only going to be working 48 weeks out of the 52 that I have in the year. So with that calculation in mind, the number of units that must be sold to reach my target, right, would be 48,571. And that would equate to about 1,012 units per week, right? Now, this calculator is available for you. And if you see, as you go in and say, well, you know what, no vacation this year, so I'm going to use my full 52 weeks, your unit drop down to 934. If you manage to shave off the material cost to $1.75, there we go. Now you're only at 817 sales per week. So this calculator will allow you the flexibility to play around with your assumptions or even your real figures and be able to see what actually would be your break-even point. So a very simplistic calculator that we have here. So let's go back to my presentation, and I am going to go back and present here. And we're going to look at some of the more complex calculators that are available, and maybe use a little bit of input from all of you here to be able to get to the next calculator that we're going to look into. So here's the Microsoft Excel template. I personally like this a little bit better. And the reason why I like this a little bit better is because I like pictures, I like the graphs, and it'll also be able to graph out different variables for you. So I have my my colleague here in the office with me, and again, this is something that you can download and actually just put in, your own. So let's call it Khurram's candles, right? There we go. So here what I'm going to go a little bit upscale. So I'm going to be selling my candles at, let's say, $12 a piece, right? A little expensive, but you know what? Let's take an example here. And my sales volume per period in terms of units is about 1,000. I'll leave it at that. In order for me to sell, here's all your variable costs, right? So now you're able to, in this calculator, break it down a little bit more when it comes to the commissions or the direct materials per unit and stuff like that. So shipping, you know what, we will leave as is. Supplies per unit, okay, 80 cents is good. Other variable costs, we're leaving it at $1.20. So variable costs per unit is $7.60. Here is where you see my unit contribution margin, right? So this is what each unit is contributing towards my total margin at 4.4. In terms of fixed costs, let's just reduce administrative costs for now. Insurance, we all live in Brampton and we know insurance is expensive in Brampton, but let's hopefully we can bring that down a little bit. Property tax, we leave it at 150. Rent, okay, let's leave it at 800. And other fixed costs, let's bring this down to $300. Again, these are not realistic numbers. I'm just using these numbers to illustrate that how this can help you. The better numbers you're putting in from your specific business, the better output you'll be able to get when it comes to when and how you're going to break even. So with those numbers put in, right, I'm ending up with a net profit, all right, and it's great. It's a profit of $2,200. So my break even is 500 units. And as you can see, here is the breakdown. I will enlarge this a little bit so that you are able to see. And once again, it's something that's available to you through Microsoft Excel, right? And you're able to download it and input your own numbers. So if you see here, the sales volume analysis, it's at 500 units sold at $13 or $12, you know, per candle, then I am breaking even. So I neither make a profit nor a loss. And when I transpose that into my chart here, that would be my break-even point, right? So the blue line that you see here, let me, you know, enlarge that a bit so that you are, oops, so that you are able to see here. So my total fixed costs are that blue line right across. My total costs are the fuchsia line, if I may say so. My total sales are the orange line up over here. And here is my net profit or loss, right? So as you can see, in terms of the number of units, this is something that's going to actually help you come and arrive at a unit piece so that you know what your break even is. Now, while it does that, you can look at it from two aspects. One would be, I need to sell at least, let's go back to the break even analysis data. So you can come and arrive at the conclusion that I need to sell at least 500 pieces to break even. Now, let's say you have a capacity of only manufacturing 400 units, right? This also gives you the ability to then come back and determine, what if I change my price to $14? And there you would see that you would break even at 360 and you would end up making about $360. So now your break even has come down because you raised your price by about $2. That's one way of looking at it. Another way of looking at it is, can I reduce the commissions that I pay and still be effective in marketing my product? Can I reduce the direct material cost per unit, right, to arrive at how many products do I need to make to be able to get to that? So Here are two great resources that you can utilize as you go in and do a detailed analysis. And our next business viability presentation in this whole series is about cash flow. So if you've done your homework on the break even, you're also then able to determine how cash flows into your system. And that's another presentation, another session next week, hosted by my colleague Roshan and myself. And in that, we're going to talk about how cash flow moves through the system and what are some of the controllable and uncontrollable factors when it comes to cash flow as well. So with that, what I am going to open this up for questions, comments. Thank you for very patiently listening to me. I'm hoping that, some of these tools will add value as you all embark either on your new journeys of the small business venture that you're taking on, or enhance your productivity, your calculations, your profitability if you've already started on that small business journey. So Jennifer, with that, I will open it up to questions. And please feel free to type in your questions, and then we can move between the slides and go back and see what how I can help answer some of the queries that you might have.
So there are a few questions that came in while you were presenting. So one is there a time span when assessing controllability or otherwise of these factors? Example, within a given time span, rent could be controlled by, like you said, choosing a lower rent office. This was a question from St. Ike.
Right. So that's a wonderful question. Yes, definitely. In terms of the time, and that's why when you're starting off on your business and you seem to have gotten a great deal, you might be more beneficial signing on a 2-year or a 3-year lease, and that would be your projections for that period of time, right? So yes, there is a time element to it as well. There was another question that came up as we were preparing this session, and that particular question was, how often or how frequently should I be revisiting my break-even analysis and looking at it, whether I need to increase price or what do I need to do? So we all start with certain assumptions and projections. If you are going to be bothering yourself every 3 months trying to go back and figure out that, what, can I increase my price? Can I reduce my costs? Right? I think that would be overkill, my personal opinion. However, any business, you are looking at least at an annual projection. So if you are taking a year, whether your year starts from January to December, or it starts from June to next June, whatever the time frame, it's always beneficial if you're looking at one calendar year or one fiscal year and making your projections, and then coming back and revisiting, your break even to see what changes you can make. I hope that answers your question.
So just a reminder, if you do have a question, yes, St. Ike says yes, thank you. If you do have a question, use the question box or chat panel on your control panel to type in your questions. So it looks like somebody has asked if it's possible to give an example, I think using the break-even template that you provided, to give an example of a service being sold.
Excellent. And I see that question comes from Claude. I hope I pronounced your name correct, Claude. Of a service, right? So let's talk about, and I don't know if I'm going to be doing justice to this, but let's talk about a massage therapist, right? Someone who's a chiropractor, or an individual who sort of a hairdresser, a hair salon, right? Now, it is definitely about that service being provided, right? There are no uh, variable costs specifically associated. So if you were to take the example of a massage therapist, the variable cost would be limited to the amount of essential oils used or stuff like that. But the biggest input that is coming through is, as Gwenda mentioned, what about the unit being our time? Hours of work as a unit, does it work the same? Yes, absolutely, because what you're doing, Gwenda, and also to answer Claude's question, would be that you are assigning yourself a unit of time, right? So your time and effort is worth a specific dollar value. So if you've said that, half an hour of my time is worth, $30, then you're definitely inputting that as a variable cost towards calculating your break-even point. I hope that clarifies a little bit. I also have another question here, and that is with respect to what about a multi-product business? Would we need to calculate the break-even point for each product? A very good terminology in accounting and sometimes in real life is garbage in, garbage out, right? So, depends, Amisha, what level of analysis you want to get into. So let's suppose in your business, you have 6 different product lines that you're selling. You might decide that you want to do a one break even, right? So that your fixed costs are actually shared across your product line. But if it was me, I would invest the time and do 6 different break-even analysis so that it can help me determine the price point, the opportunities to control the factors that can reduce the break-even for each one of those. So yes, if I have 6 products, I would do 6 break-even analysis. And again, the chart that I will display here can simply be copied by right-clicking, and then you just copy, and then you can call it break-even analysis data for hairspray, break-even analysis data for, curlers, or whatever you're looking at. And then it will give you a whole lot more control to be able to, I shouldn't say manipulate, but to be able to control the various factors that go into your business and the cost. I also have from Ollie a question or a comment. In a scenario where the price analysis has been done accurately and down the line, competitor drops the price in order to strategically extend your break-even point and potentially stress you out of the market. Let's see. What would be your hypothetical options? Okay, that's a wonderful question. So the way I understand it is my little candle business, someone else comes in the market, is able to, drop down the price, and all of a sudden they're selling a whole lot more. What you also have to incorporate is that they will now have to do a lot of volume to recover the price discounting that they're doing, right? So in terms of that price discounting, how do you get to that piece, right? What would you do to make sure that you can either extend your break-even point and potentially, so this is your competitor stressing you out. So some of the levers that I would use is go back to look at what are some of the controllable factors for me. Can I look at additional channels that I can market my product through and reduce, my overhead costs? Can I outsource my warehousing? And I know as much as, I have my small business partners and members online, I don't want to bring in the Amazon, word here, but is there a possibility to do indirect sales to be able to reduce that? And quality, is that now being compared at the same quality? Is that something that you can highlight with your product as compared with the competitors? So great question, Ollie. I hope I've done a little bit of justice in trying to give you some direction with that. Thank you, Barb, for your comment of making this clear and engaging. So my strong encouragement to everybody would be, give it a try. Use use the Excel template, use our calculator, which is available online, and like I've said before, we have numerous articles that are there to assist you. We'll be talking about cash flow as we go in. However, when you're getting into business sense, there's a lot of information that is available, and how to survive, during the tough times. There's real life stories that can provide you inspiration or ideas in how to, expand, increase, the presence, the social presence of your business, which again is a topic that we'll be wrapping our series off, which is our last topic, and that is enhancing your, sales and marketing and your distribution or your marketing activity through that. Let's see if we have any more questions that have come in.
It doesn't look like it. If anybody has a question, let's say after the presentation is over, what is the best way that they can reach out to you?
Yeah, so the best way to reach out would be through email. You can always reach me at my first name, Khurram, dot my last name, Shahzad, Shahzad, at meridiancu.ca.
Thank you. And I will include that in the chat box so everyone has your email address.
Awesome.
We'll just give it a couple more minutes. I guess just as a friendly reminder, we will be sharing a link to the recording of today's webinar so that you're able to refer back to it. Perhaps you know somebody that might have missed the webinar today, or someone who you think this content would be relevant to. Feel free to share that link so that others can check it out, as well as we will be emailing you a copy of today's presentation that includes the links to all the great tools that were shared today.
And finally, Jen, for our participants as well, thank you for your time that you've invested in yourselves and in your businesses, because like one of our participants mentioned, your time is worth money as well. And hopefully by the end of the series, you will be able to capitalize on those gains. I would strongly encourage you to attend our next session, which is on cash flow analysis, to be followed by, financing. And our intent is, as you move through these sessions, to be able to give you the tools and resources to be able to make yourself a very viable business plan. Because I know one of my colleagues, as he will be talking to you about applying for funding or getting a loan, one of the best things that we'd like to look at is someone who's prepared. So if you have a break-even analysis and if you have a cash flow calculator, guess what? Your chances went quite a bit high, because we know that you've invested the time and the homework, and we can see the numbers there, right? So it helps us make a very informed decision when we're looking at financing for you.
Amazing. Thank you so much. This was a really informative session. I feel like for anyone that might have been confused by the break-even analysis, hopefully now has the tools and understanding to be able to do this on their own. And just lastly, we do have another session coming up next Wednesday and the following Wednesdays. So next week's topic is still focusing on business viability, but we will be looking at the cash flow forecast and looking at the factors that determine how cash enters your business, as well as how to forecast your monthly cash outflow. So another very important topic that we're really looking forward to. So thank you again so much. We're getting a lot of great feedback in the chat box. People really enjoyed the session, and I think for anyone that might have been confused coming into this, definitely feels better informed and equipped with the resources that they need. So I just want to thank you once again for joining us today. We will be following up with an email this afternoon. And thank you to Meridian. Thank you, Khurram, for the great presentation this morning. Really appreciate it.
Thank you very much, Jennifer. Thank you, everyone. Enjoy the rest of your day. Thank you.
You as well. Take care, everyone. Have a wonderful day.